Has the world of finance become a monolith, a hegemonic temple to interest and debt? Is there room for an alternative, one that fosters righteousness, advocates shared risk, and espouses ethically responsible? In the era of fluctuating market trends and financial uncertainties, the demand for a more balanced and reliable banking system that resonates with ethical principles has become a pressing concern. At this present moment, we find ourselves on the verge of a dramatic shift, a financial revolution that is transforming conventional banking principles. This revolution is led by none other than Islamic banking. Envision a banking model that is deeply rooted in principles that discourage usury, encourage risk-sharing, and prioritize ethical investments. This model is not a mere figment of imagination, but a reality that is gradually unfolding in the contemporary financial landscape. Welcome to the compelling world of Islamic banking, a financial universe where capital does not revolve around interest, but around socially responsible dealings. This system stands as a stark contrast to traditional banking, which is primarily driven by interest-based lending. Islamic banking, however, offers innovative financial products that revolve around profit-sharing scenarios, asset-backed financing, and risk-sharing partnerships. Imagine a world where finance is no longer synonymous with debt, but is linked with social justice and ethical responsibility. A world where banking is not just a cold, impersonal transaction, but a system that impacts society positively. Unlike conventional banking, with its foundations in interest-based lending, Islamic banking structures its financial products around profit-sharing arrangements, asset-backed financing, and risk-sharing partnerships. In this alternative financial universe, a variety of instruments play an exceedingly pivotal role. Not only do they serve as the foundations of a system, but also shape the character of an entirely different kind of banking. The terms mudaraba, musharaka, ijara, and sukuk may sound exotic to the untrained ear, but they are, in fact, the bedrock of Islamic banking, each carrying profound meanings and implications. Mudaraba, for instance, is a kind of partnership where one party provides the capital while the other offers labor or expertise. It stands for a shared profit-loss principle, ensuring an equitable economic system. Musharaka, on the other hand, refers to a joint enterprise or partnership structure, often used in business transactions, where profits are divided according to an agreed-upon ratio, and losses are shared according to capital contribution. Ijara is to a leasing contract, another essential instrument in Islamic banking, where an entity leases out an asset to a customer for a stream of rental and purchase payments, culminating in the transfer of the asset's ownership. Lastly, sukuk, similar to a bond in conventional finance, is an investment certificate that complies with Sharia laws. It represents ownership in a tangible asset, service, project, or business. These complex instruments facilitate an array of services. They provide a framework for deposit taking, lending, investment, and wealth management to take place in a manner that aligns with the principles of fairness and transparency. They form the basis of a banking system that challenges conventional methods, ensuring an ethical and just financial world. Islamic banking has been making waves, challenging the status quo and offering an ethical alternative to conventional finance. It is not just a financial trend, it's a revolutionary movement, steadily gaining momentum across the globe. Islamic banking operates under a unique set of principles, which are inherently ethical and derived from the Islamic law, Sharia. It prohibits interest, uncertainty, and gambling, thus ensuring fairness and transparency in every financial transaction. As opposed to the traditional banking system, its core principle is to promote economic justice. It encourages profit and loss sharing, fostering a sense of partnership between the investor and the borrower. It also advocates for ethical investment, promoting businesses that contribute positively to society. In the event of loss, it is shared by all the parties involved, protecting the weak from the burden of financial loss. This banking system has been steadily evolving and adapting, undeterred by regulatory and institutional barriers. It has been able to navigate through the challenges with resilience and ambition. It has become a beacon of financial inclusion, giving opportunities to marginalized in the conventional banking system. What drives this growth? a rising global demand for ethical and socially responsible financial services. The appeal of this banking system is universal. It's not just for Muslims, but for anyone who believes in ethical banking. This has led to a surge in global demand, driving the growth and evolution of Islamic banking. The conventional system, with the International Monetary Fund at its helm, has been under the spotlight. This financial institution, a stalwart of the global economy, has found itself in an intense glare of scrutiny. A growing chorus of critics and skeptics have started to challenge the sustainability of its methodologies. Principal among these is the IMF's advocacy for interest-based lending and debt-driven growth, two practices that they claim are deeply problematic. These critics argue that these practices are not just economically unsustainable, but they also exacerbate economic inequality. They assert that this model of economic development, when implemented without checks and balances, can lead to financial instability. They argue that it can lead to a widening wealth gap, with the rich becoming richer and the poor sinking deeper into poverty. Moreover, they insist that this model undermines the very essence of economic justice. It discounts the principles of fair distribution of wealth and equal opportunities for all. They argue that instead of promoting a fair and just economic system, it fosters a system that is skewed towards those with already existing wealth. Critics also argue that ethical finance, a concept held dear by Islamic banking, is ignored. They posit that the model propagated by the IMF fundamentally contradicts the principles of ethical finance. They insist that it undercuts the importance of responsible lending, fair terms, and the equitable distribution of profits and losses. In conclusion, these critics assert that it undermines the principles of economic justice and ethical finance that Islamic banking holds dear. As Islamic banking continues to gain prominence, it unveils a new model for the world, one that is rooted in ethical principles and social responsibility. This unique financial structure is based on the principles of Islamic law, also known as Sharia law, which prohibits usury or the payment and receipt of interest. What sets Islamic banking apart is its strong foundation in equity, economic justice, and the welfare of the society. It promotes risk sharing, discourages speculative behavior, and emphasizes the necessity of tangible assets. This has led to the introduction of distinct products such as profit-sharing mudaraba, cost-plus murabaha, leasing ijara, and equity participation musharaka. Moreover, Islamic banking considers money as a mere medium of exchange, a way of defining the value of a thing, and not an asset in itself. This approach has strategic implications for risk management, helping to maintain financial stability during economic downturns. The growing acceptance of this ethical banking practice is evident in its widespread adoption from the Middle East to Asia, Europe, and even North America. It is steadily gaining ground, challenging the dominance of conventional banking systems and turning a new leaf in the history of global finance. Despite this growth, the Islamic finance industry faces significant regulatory and operational challenges. Differences in interpretation of Sharia laws across countries, lack of standardization, and limited human resources are key hurdles. Furthermore, there is a need for increased dialogue and understanding between Islamic finance institutions and their conventional counterparts. The challenge now is to overcome regulatory barriers and foster dialogue between the Islamic finance world and conventional institutions. This not only requires policy adjustments and regulatory support, but also a paradigm shift in the way we perceive and understand finance. The implications are profound. A more inclusive, equitable, and sustainable global financial system is within our grasp. Islamic banking, with its ethos of ethical values and socio-economic development, is leading the way. So, as we navigate through the complex and evolving landscape of finance, let's carry with us the knowledge and insights gleaned today. Let's continue to seek out and explore alternative financial models. After all, the future of finance is a shared journey, and every step we take towards understanding and embracing alternatives like Islamic banking brings us closer to a more equitable and sustainable world. Thank you for joining us on this fascinating journey. As we prepare to step into the future, remember to engage and participate. The world of finance is not just a spectator sport. It requires active involvement, curiosity, and a willingness to understand and adopt new models. We encourage you to subscribe to this channel, share your valuable feedback, and stay blessed. Your engagement will help shape the discourse on finance and contribute to a more equitable and sustainable world. Remember, your voice matters in shaping the future. Thank you for being a part of this journey.